Hey everybody, happy Sunday and welcome to episode 11 of the Stock Trading Pit. Today's agenda is going to be 4 segments as always. Segment 1 is going to be talking with traders with Dan and guest Peter Hegedus. Segment 2 is going to be the broad market recap, looking at some broad market ETFs as well as some crypto charts. Segment 3 is going to be the watch list with Brian, Shannon, and I looking at some different stocks into the days and weeks to come. And then segment 4 is going to be the weekend chart requests. So sit back, relax, and let's get started.
Hey everybody, welcome to another episode of Talking with Traders. Today I've got Peter from the Trader's Path with me, a really special guest. He's been on the program before. Welcome.
Thank you. Glad to be here.
Yeah, it's always great to have you on. So this segment is all about you and how you got into trading. So let's start there. What brought you into this world?
Boy, that's a long journey that got me there, but it started mostly with investing. So, for many years, I was kind of just a passive investor. And then going back about 15 years ago, I got a lot more interested in kind of handling my own investments and making my own decisions there. And as time went on, I started thinking more and more, boy, I not everything needs to be buy and hold, which is mostly what I was doing and what most new investors who are managing their own investments will do. And I had this idea that maybe I can start to trade some things shorter term and try to, so I kind of started with mostly what some people would refer to as position trading, where I would take an investment, but then I would sell some on the moves up, buy some back on the moves down. And eventually that just progressed more and more into, before I really even knew what the term meant, it progressed into some swing trading for me. So that's kind of where my interest in trading started, and eventually got to a point about 5 years ago where I was had moved up like pretty well in the corporate world and was just doing my investing and trading on the side, and got to a point where I was able to sit down with my wife and say, I think this is something I can do and get out of the corporate rat race and the grind and be able to have a little bit more freedom in life.
The big dream, right? How'd you go from that into technicals and charts and things like that?
Yeah, so when I started doing more of the short-term trading, that's when I really started digging into technicals as opposed to fundamentals. And for me, it was going through a lot of trial and error, trying to find some good mentors, and I cycled through some really bad ones until I was able to stumble on some really good teachers, really good mentors. Who were able to point me in the right direction and just teach me a lot about charting and about shorter term trading and how to manage things.
Makes sense. So I'm curious. I know you're big into the TTM squeeze indicator. Why do you like that one?
I like it because it allows me to find stocks that are consolidating. And when you talk to technical traders, you're going to find some folks who like to play breakouts, right? I want to buy the breakout as it's happening, and that works great, I think, in certain market conditions, but in other market conditions, and I happen to think we're kind of in those conditions right now, trying to buy the breakout doesn't necessarily work as well. So what really interested me in the TTM squeeze, it was actually the co-founder of the Trader's Path, Justin Essery, who kind of found it and brought it to my attention. And what was so interesting is it finds stocks that are in tight consolidations. And one of the great things for me is it's easy to scan for. So I can set my TrendSpider scanners to just, instead of trying to page through thousands and thousands of charts and look for candlestick and moving average action that tells me there's consolidation going on, I can just scan for the squeeze. And I know when there's a squeeze, there's consolidation. And it doesn't necessarily mean that stock's going to go up. It could be consolidating before, selling off, but it gives me a nice focused list of names to look for that are going through that consolidation. And the longer it goes on and the tighter that squeeze becomes of the Bollinger Bands inside the Keltner channel, you just know that that big move is coming. And that's what I really like about it. It's, early on trading, and I think every trader to some extent struggles with this. We've all chased a name at some point, right? Where you see the move happening, it starts to go up and you say, well, oh, that's going, it's going to keep going, I want to chase it. With the TTM squeeze, really the idea is to get in before that big move comes. You want to get in just before it happens or just as it's starting. And it really helps to identify charts that are setting up for that.
That makes a lot of sense. We were just talking about this before we started filming, but I've also observed that buying breakouts is a lot harder the last few months than it was before.
Absolutely. Yeah. I mean, 18 months ago, I would tell you, particularly for day trading, it was like buy breakout, look for volume, buy at the breakout point, have your stop set. And right now you just get stopped out of so many. And that's, I think, something really important for traders that sometimes is, people kind of underestimate the importance of this, but the character of the market changes. It's not the same all the time. And, we see it in sentiment, right? So we see it where sometimes everybody's bullish, everybody's bearish, and, you can take that for what it's worth. Sometimes those are contrarian indicators, but just the character of a market changes. There's times, I actually remember in 2018 in the spring, the market was pulling back, but breakouts were working great, right? It was kind of ironic. The market was pulling back. The VIX was spiking, but breakouts were working great. Today's market, breakouts are really tough. So I think it's really important as traders that we have to adapt. In fact, we often talk about in our chat room, we often talk about a book, which is kind of a silly little book, but it's great. It's called Who Moved My Cheese? And we feel the market, that's very much the case. Like you have to figure out when somebody's moved the cheese, and you have to adapt and trade accordingly.
Yeah, some of the worst trades I've had in the last few months were trying to buy breakouts. And I've noticed myself that, if you give it a little time, that breakout will pull back to support and give you a much safer entry, right? Where you can manage your risk better.
Yeah,
so
absolutely.
For sure. Besides the squeeze, what other indicators do you like to look at?
So I use a number of simple and exponential moving averages, but probably the biggest ones for me are the 3 and 8 exponentials. And for me, it's not really necessarily important either of those on their own, but I like to know the relationship of those two. A 3 crossing up over the 8 is usually pretty bullish for me. And vice versa. 3 crossing down the 8 is usually indicative that there's going to be a pullback coming. And then the simple 20 is so important right now. In fact, talking about breakouts versus buying support, if you can find names that are pulling back and consolidating to their 20s in a TTM squeeze in an uptrend, it just provides such a good risk reward entry in the market we're in right now.
Makes sense. So while we're talking about risk versus reward, how do you manage stops, right? Like, do you put it just below the 20, or do you give it a little more wiggle room? Because the algos and market makers and other traders are always hunting everybody else's stops.
Yeah, so one of the things I do different with stops, particularly on swing trades, day trades obviously going to be a little bit different. You just have to be really disciplined, and if it dips below your stop, you're out because it's a day trade. Swing trades, one of the things I learned early on from one of my mentors is don't get shaken out by intraday action. So for me, I don't put, and you really have to be disciplined about this. You have to know that you honor your stops, because it's a dangerous game for folks who say I will and then they don't. But if you're disciplined and you can honor your stops, I only use stops on a swing trade in the afternoon. I want to know where is it going to close, right? So if I'm in whatever the stock may be, if I'm in Apple and I have $120 as my stop, if I see intraday action, particularly early in the morning, and the market's down and it dips down into the 118, 119s, that's not going to stop me out. But if it's going to close below 120, so if after 3:30 it's below that level and it looks like it's not going to recover here, that's how I manage my stops. Because otherwise, to your point, algos and market makers are just they're gonna shake you out, and especially in this market right now where it's just a choppy market, both on an interday and intraday basis.
I have the same rule, and I learned it the hard way, right? But if I see a swing stop, I'm making air quotes with my fingers here, right? I will always wait until later in the day. It may lead to a bigger loss, but very often in this market in particular, it will come back in the afternoon, right? Yep. And you'll have a big wick on your chart, and you feel like a jerk when you sell at the bottom of that wick, right? So
yep, that's what market makers and algos like to do to us. So, and to your point, sometimes it does lead to a bigger loss, but it should lead to getting stopped out of less trades and actually letting them work.
Absolutely.
Curious. I would also stress you need to, if you're not using hard stops, you need to know you're disciplined enough to honor your stops and not just say at the end of the day when it doesn't come back, I'm just going to hold it another day, because that's going to lead you on the road to ruin.
Absolutely. I think a lot of new traders will actually, when they get stopped on something, instead of taking the loss, they'll redraw the chart and try to find a new level of support. Yeah. And it just keeps getting lower and lower, right?
Yeah, right. I thought support was the 20-day moving average, but really maybe it's the 50, right?
Yep. Or you draw a new trend line, connect some other line, just you see what you want to see, right? Because we're all human.
Yeah, absolutely. Or people change time frames. They say, well, I had this stop based on the daily chart, which is what I entered the trade on. But boy, if I look at the weekly, the weekly, whatever it might be, that's a little bit lower, that's really clear support. And all of a sudden your swing trade is turning into a long-term swing trade and then into an investment. And it's a recipe for disaster.
I totally agree. Do you tend to trade options, or do you tend to trade common stock?
I do both. I kind of went all options for a while. And I do that for a very specific reason. Is I was looking at, as a trader, I'm always looking for continuous improvement. And one of the things going through my journaling, that I said when I had bad days, it was usually because I overtraded. So one of the things I did is I removed margin from my account, because then all of a sudden you need to think very carefully about how you want to spend your money. And that's kind of pushed me more towards options, just because they settle overnight. Versus having that T+2 settlement you have on equities. Although I have started pushing more back into equities for one reason, and that is the choppy markets we're in right now. I've been doing some more covered call selling, right, where I'm taking a position and in the shares and wait for a move up. And usually these are names I want to own for maybe 3 to 5 weeks, longer term swings. I'll take them, and on a move up, I sell calls. And then if they move down, you can buy the calls back for pennies on the dollar.
Absolutely. You mentioned
and
journaling.
You can rinse and repeat. So
you definitely can. You mentioned journaling, which is a topic that we don't hear about often here. And, I've become a big proponent of journaling for my own trading. A lot of people don't do it. Why should they?
Because it's amazing that when you make the same mistakes over and over again, we have really short-term memories as traders, right? So we make a mistake on Monday and we lose some money, and then a couple of days go by, and then we make the same mistake on Thursday, but we don't really remember what we did on Monday. When you're writing it down in a journal and you just see the same, you'll start seeing you're writing the same note all the time. It just becomes so quickly apparent what it is you need to work on. And for me, that one of those things was over trading, right? Say, boy, and I journal really simple. I've tried a couple of the different software programs out there. I actually just use a really simple Excel spreadsheet, and I make some highlight notes of the day. I don't necessarily journal every single trade, but I say, basically would give myself a grade for every day, which was green, red, or blue, and that wasn't P&L. I could have lost money and I could give myself a green for the day because I stopped out of trades that I should have stopped out of, or I did the right things. So it wasn't just judging yourself, grading myself on P&L, it's grading myself on how did I actually trade, right? Because you can trade really well, and if you have a day where the entire market has a giant pullback, you're going to be red on your P&L, but that doesn't mean you traded poorly.
That's excuse me. That's a concept I don't think many understand, right? You and I agree with you fully. You shouldn't judge yourself as a trader on your P&L entirely, right? Your discipline is just as important because that will lead to a better P&L in the future.
Yeah, absolutely. And you can, and on the flip side, you can have days where you make lots of money, where you were actually really irresponsible and rash, and you don't want to keep repeating that behavior. You got lucky. It happens.
Slops. So besides journaling, what other things do you do to improve your performance?
Constantly study. I mean, the one thing I always tell newer traders that surprises them is you really make your money outside of market hours. You need to execute between 9:30 and 4 Eastern, but you really make your money scanning, looking at tons of charts, doing your homework. I always make it a point, although I love to read like junky spy thrillers and stuff like that, but I always make it a point, a couple books a month to read some books that I'm going to learn something from, and always try to look for new strategies. I mean, I believe in the trading world. We talked about how markets can change. If you're not constantly trying to educate yourself, then you're going to get stagnant and you're going to fall behind.
Absolutely. So you mentioned books. What's your favorite trading book besides Who Moved My Cheese?
Who Moved My Cheese is a really easy read, and it's underrated. But one of my favorites is The Disciplined Trader by Mark Douglas. Really just talks about discipline, risk management, some of the psychological aspects of trading. That's a really good one.
Thank you for sharing that. Question for you, and I ask everybody this: what advice would you give somebody brand new to trading? A lot of people are getting into the markets right now, and not a lot of them know what they're doing.
Yeah.
What would you tell them?
I would tell them two things, two really important things. Number one, the most important is be laser focused on risk management and capital preservation, because everything about trading, particularly right now with the GameStop situation and meme stocks and Wall Street bets, everyone just sees great big dollar signs that are going to somehow, all this green that's going to fall into their account somehow. And I would tell newer traders, you're focused on absolutely the wrong side of things. You need to be laser focused on risk management and capital preservation. And if you do those two things well, and learn, and then you start to find winners, you're going to get there, and it's going to go well. But if you just focus on all this money to be made and you don't pay attention to the risk management side of things, it's going to end really badly.
Good by greed.
Yep. Yeah. So I think you need to avoid greed and FOMO, and you need to really focus on risk management. And the second thing is find a good mentor. Find a good mentor, because unfortunately there's no classroom or textbook that's going to teach you everything about trading, but you have to find good mentors who are going to help you learn strategies. And the other thing is you need to find a mentor and a strategy that fits your personality, because not every trader's the same.
Yeah, I agree with that. A lot of new traders think they can just copy somebody else's ideas and trades, and it rarely works out that way.
Yep. Yeah, we call that chasing alerts. And if your strategy is to chase alerts, you just need to think about what happens. And we had an interesting discussion about this earlier, Dan. What happens if the alert service you subscribe to all of a sudden goes out of business? What's your strategy now?
Yep. So tell me about the Trader's Path. You know, what makes the Trader's Path different?
We're well, kind of nice segue right there, talking about alert services. Although we do some alerts, we really focus more on education. You know, our goal is to teach our members how to trade, how to manage risk, how to become technically strong, and how to make their own decisions. And that's really, I think, what sets us apart from. And there's lots of other great services out there as well, but we're not an alert service focused, although we have alerts because it's important to learn by example. You know, our goal is that our members, after a year with us, want to hang out for the community we have in our chat room, but don't really need alerts anymore, that they can make their own decisions.
Teach them how to fish, right?
Yeah, exactly. We want to teach people how to fish rather than just give them a fish fry for the day.
I think that's great. Well, we're running out of time here, so I'm gonna have to cut it off here. Production guys are messaging me saying you're going over time. Thank you again for being here, Peter. I really appreciate you being on.
Thank you very much for having me. Always a
definitely.
pleasure.
And for those watching, we're going to put some links in the description below, but we'll give you a link to Peter's Twitter. We'll give you a link to the Trader's Path. We'll give you a link to Amazon for Who Moved My Cheese, and also for the Disciplined Trader. So thank you again, my friend.
Thank you.
Alrighty, let's look at the broad markets into the week ahead. And it was quite an interesting week. We hit all-time highs, took a big move down into quadruple witching. And if you guys are going to watch the segment with Brian, he mentioned on Thursday, that this 387 area would be a level of interest. And I mean, we tagged it almost perfectly. So a nice bounce there. Great call by Brian. On these anchored VWAPs, pretty much from the swing low and the swing high. You can see how well those aligned, and we bounced right at it. And, you know, we did have some weird action into the end of the day on SPY, but you'll see here that still a majority of that volume was at the top of the range for the day on Friday, which you can see here by the raindrop chart. Now, on the weekly side of things, you can see here that we do have this ascending wedge forming. It's getting pretty tight up here. This is a great example of where you just set alert on both of these lines, whether you want to be alerted when it breaks through. Maybe you're just looking for a move through that line on the upside or through that line on the downside. This is where you'd use the breakthrough alert here. And you'll see here that you just click on breakthrough. You don't need sensitivity on the breakthrough because you need to actually break through that actual line. Then you can see here, you just have this on the 30-minute chart, resistance above. Have it, I would say, expire. I mean, this could take a couple weeks to break to the upside or the downside. 30 days have passed. Create the alert on the upside, create the alert on the downside. And this is allowing you to remove emotion out of the trade. Instead of having to guess which way the price is going to go, you just essentially allow the alerts to alert you when the price action is actually doing something meaningful. In this case, either breaking through resistance or breaking down below support. So here, set your alerts, forget it, and you move on. So SPY, a really nice bounce on Friday. The one thing that I want to go over here, this is the SPY monthly versus the 10-year Treasury note yield. A lot of people are looking at the yield spiking as something that's, you know, bad news, and I was definitely keeping an eye on it as well. But I looked back and I started to look at anytime we have a pretty big spike in the yield, anytime we have this green arrow, you can see here that this is a spike pretty much every time over the last 25 years. And you'll see this is correlated with the S&P 500, SPY on the monthly. And these red circles highlight the top and the short-term top after that spike. And you can see most of the time after we have a spike in the yield, the market continues to move up. It's actually funny that when this is done spiking, the market really starts to move up. And so you did have the .com bubble where you did have a spike in yields and you had the market moving down with yields moving down as well. But for the most part, you've almost always had a move up after a spike up in yield. So this is just a representation of seeing that visually, looking at SPY versus the 10-year. So, you know, if you're getting really emotional and nervous about the 10-year, you know, this chart kind of puts things into perspective that after a big spike, you're generally getting a continued move in the market to the upside. So we'll have to see what happens here. I don't have this on log. If we put it on log, you'll see here, obviously the arrows are going to be curved because we put it on log scale. But either way, I mean, there's generally a move to the upside after that. We don't know how high the 10-year is going to go. That's one thing to consider. But, this is a pretty big move considering the other moves that we've seen over the last 25 years. So just something to note on the 10-year. If you want to look at the 10-year note on Trendspire, just do the cash tag, pretty much $TNX, and that's how you'll be able to see that. Moving on to the Qs. The Qs are really just holding this longer term support zone here. So you'll see here on the weekly, we're just continuing to hold this area. We did break down through it a couple times over the last couple weeks, but then we did hold it. We closed and opened above it all 3 of these weeks. We did have these wicks though below. And then on the daily side of things, we've been trying to form some type of base here. A lot of people are seeing this inverse head and shoulders forming. Will it become a self-fulfilling prophecy? We'll have to see. The one thing I'll mention here on the raindrop, we did have a decent amount of volume at the top of the range, like we saw in SPY as well on the daily raindrop on Friday. So we'll just have to see if this right shoulder holds, or we continue down next week. But for now, it is holding pretty well going into the week ahead. Next one is IWM. IWM didn't have the best week here. It was a little red. We're nearing this longer term level of resistance. So let me go ahead and turn off the Anchored View app. You'll see here just on the weekly side of things, we are kind of grinding up near the top of this resistance. It's only resistance until it proves itself as a resistance. We could easily break through that in the coming weeks. On the daily side of things, you'll see here, same type of approach with the Anchored VWAP from the swing high and the swing low here over the last month and a half or so. You'll see that these Anchored VWAPs held really nicely on Friday, and you can see that it bounced exactly where it needed to on the daily chart. We do have quite a bit of volume at the top of the range as well, showing that there was conviction by buyers absorbing that supply up here in the upper 220s, 227, 228. So that is IWM. We'll see what happens going into the week ahead, and just keep in mind that we are kind of nearing this longer term resistance. And just because we're nearing it doesn't mean that it's going to break down. It's just a level that has had a little bit of a reversal in the past. Going into DIA, DIA was one that didn't have a great day on Friday. You still did have a green raindrop, which is worth noting, even though it was a pretty red candle. You can see here that we were talking about this broadening formation last week. You can see here that we really respected it over the last few days of the week. And you can see here that we do have the Anchored VWAP here from March 4th. So if we did continue down, this would be a level of interest below. You just slap on an alert around this area. You can either use the sensitivity or just a breakthrough. It really depends on your style of trading. So if you want to have an alert that touches this area below, that's how you'll be able to do that. You'll be able to essentially get an alert anytime the price tests anywhere within this purple zone, rather than having to be alerted when it breaks down through it. So sensitivity alerts are really nice for that reason, and a great way to just watch your charts without actually having to sit in front of the screen and watch the charts. On the weekly side of things, you can see here we were talking about the weekly breaking through this resistance last week. Not a pretty strong continuation that we were maybe expecting to see. We did an intra-week break to the upside, but then we pulled back pretty hard. So we are kind of stuck here at this previous level of resistance for now. Going into Bitcoin, BTC USD, not a ton has changed here. You can see here that we are really kind of stair-stepping up these volume shelves here. So if I do an Anchored VWAP, or excuse me, Anchored volume by price from the swing low, as we've been doing the last couple weeks, you'll see how there is definitely volume starting to aggregate up here, which is possibly creating a base for the price. And you'll see that in this case, if we did break out, we really need to break this 5.618 extension on the weekly. This has been a level of resistance or a level of interest for sellers multiple times over the last month. We didn't necessarily get there in mid-February, but we have tested this area now twice, 2 weeks in a row. So this would really be crucial. Not only is it a 0.618 extension, but it's also it's also just a psychological level. 60,000 is an even number. It's just one of those numbers that people are watching. So if we do start to break through, let's say, this high around 61.5, 62,000, that's when things get interesting again. But for now, we're just kind of hanging out right at that 5.618 extension from the measured move of 2019 down to March 2020. So the extension is a function of the June highs and then the March lows. And so this is a crucial area to break through. And it kind of looks similar to what we saw back in January of 2021 before breaking out again. So let's just see what happens going into the week ahead. VIX is the last one we'll touch on here. And VIX, I need to change this to a raindrop, out of a raindrop to a regular candle here. Sorry about that. So the main thing about VIX here is the fact that, every time we've really moved down over the last month and a half, 2 months in the SPY, the Qs, if it's really a strong move and something that people are getting nervous about, you're generally going to see the VIX pop. In the last couple times we've moved down on SPY, the VIX has actually hit lower highs every time. So even though it looked like the world was ending in early March, we still actually hit a lower high than we did in late January, early February. So something to consider that we really, barely budged on the VIX this week. And on the weekly side of things, we've been talking about this for 8 months straight. Turn on the gap snake. You'll see the automated gap detection does show that we have not fully filled this gap below. We still have a little bit to go. So if you haven't tried the gap snake, it's great on obviously the VIX here, but you can also use it on any other chart just to look for these gaps without having to manually do that. So that is all for the broad markets. Hopefully this was helpful. Kind of a crazy week in the markets, but that's the markets. They're always crazy. So hopefully this was useful, and let's move on to the next segment. Alrighty, coming into the watch list segment with not only a mentor to me in the markets, but really in life overall. Mentor in fishing, mentor in life. He does it all. Brian, thank you so much for joining us. And, as much as I'd love to see some great stocks on the watch list, the market is really looking rough. Today is Thursday, so we did this pre-recording. So, we'll see what Friday brings. But for now, the setups seem to be kind of breaking down. So let's just look at the overall markets, maybe some trades that you've taken over the last couple of days, and a little bit of a review. And I'll hand it off to you. And just a big thank you for doing this today.
Yeah, great to be here, Jake. Thanks for having me on. You guys do a great job with these. So, like you said, there's the setups. I'm a swing trader, so I'm looking at holding stocks anywhere for a couple days to maybe 2-3 weeks. Today, I got stopped out of a bunch of stocks. One was DBX. We held that one for 9 days today, and that was about a 10% gain. But we got stopped out of the balance of that one, so it's starting to come back in. And, other names, I won't bore you with what's been making money in that. But if we look at the S&P, let's just pull that up real quick. That's where I had it to start. We've seen this November peak, this gap here in November. This volume weighted average price has been just perfect the last 4 times it's touched. And it's really kind of crazy because each time it comes down there, I'm thinking there's no way it does it again. It's just impossible. And then, the buyers step in. And, so 2 weeks ago, we came down and tested it, and we've had a very nice bounce. And, the market is basically one day, the S&P is one day off of an all-time high here. But when I'm looking at charts like I do at the end of each day, I'll look at 500-600 charts on 5 or 6 different time frames. Well, actually 6, not 5 or 6. And the setups are just few and far between. We've got a lot of stocks breaking down, and you would never know it just by looking at this market. I mean, we're down a little bit today in the SPY, and we're still above the volume weighted average price from that recent low. That also ties the volume weighted average price from the last time we touched that volume weighted average price from the November. So I'm referring to this blue one, and the volume weighted average price from the prior peak. So, I think that 387-ish looks like an important level. I wouldn't be surprised to see if we touch that in the next day or two on the downside in the S&P 500. And if we look at a 65-minute time frame, you can see, just those levels with a little bit more clarity. So it comes down to that 387-ish level. Where we really saw the damage, though, was in the NASDAQ. And there's a little bit more reason for concern about the NASDAQ here. So we'll start, actually, let me back it up to the daily time frame. And what we have here, of course, is here's the orange is the year-to-date volume weighted average price. And you'll notice I had that on the SPY chart as well. Currently, we're below that year-to-date volume weighted average price, and it's declining, meaning money is on balance flowing out of the NASDAQ year-to-date. Now, not huge, but it is in a trend lower. And when we finished, today we're down on the year for the NASDAQ. So we also came down. Let's just take a look at some of these levels. A lot of people were looking at and observing this inverted head and shoulders pattern that seemed to be setting up. So what we're looking at now is this is basically the February high. I've got a volume weighted average price off of that. And you can see it continued to decline into there. And now it's flattened out. But this is the left shoulder. This would be the head. And this is the shoulder. That a lot of people were looking for it to break past this, the neckline, which has been resistance. Instead, today, we gapped lower and failed. That's bad action. That's not what you want to see happen. What we came down to is the volume weighted average price from the March low. So I think that what's most likely is probably we get a bounce up towards that 315, 316 level. And if it can't hold, then we're going to have to back it up to a bigger time frame and start to look at this market and say, maybe we're in for another test of that 300 level here in the next week or two. So I think things, in other words, Jay, can get a lot uglier on the downside. The stocks, go ahead. I don't mean to keep just going on and on here.
No, I was going to say, do you think this is mostly the 10-year yield continuing to go up? Is it a mix of, is bad news good news and good news bad news right now? There's been so many times in the market over the last few years where actually bad news is good for the market because that means yields will be lower. But it seems like the 10-year is getting a little out of control as far as just being able to stabilize. It just keeps going up.
There are. And so I'm not permission for the yield chart, but here we have the 20-year bond, which is obviously in free fall. And it continues to weigh on it. I look at each trade based on its own merits. I'm not the guy who analyzes the bond market to see what's going to happen in stocks, simply because we've been in this horrific downtrend since July of last year in the bonds, and now it's getting the attention. Maybe we're closer to a bottom since we're getting all the talk about it now. But we've had a pretty inverse relationship there that, that the bonds are going down and S&P has been going higher. So to me, it's all about trade each stock, each market based on its own merits. I'm not one of these ratio guys who believes you have to, be aware of what gold is doing divided by the dollar times 0.3 SPY or whatever the new formula is. And I'm not making fun of anyone. My time frame is that, again, of a swing trader. So I don't really have to worry about those global macro concerns. I'm not running billions of dollars and trying to move them in anticipation of these events. To me, it's a stock picking event. And what I've noticed with the stocks that I've been in recently, you look at things like FUTU. These guys reported 300% increase in revenues and earnings, 2 days ago, and the stock's getting smushed. If good news can't make it go up, what can? And just the same as if it rallies in the face of bad news, it means there's no supply. So when you look at what's been working, it hasn't been the big tech names. It's been some of these what I consider to be boring stocks like Boeing. Boeing was a great trade recently. Just got out of Raytheon today, which Raytheon, I can't believe I'm trading a stock like Raytheon or Kraft Heinz Company. These are not the types of stocks that I like to trade, what I consider to be leaders. I'm looking at, one of the best setups I can find right now is Genuine Parts. Used auto, auto part company, not the most exciting thing out there in my universe. So when I start seeing the setups in these more defensive names, Well, that's market information. The market's telling me, the high risk stocks, they've still got room, most likely, to either retest the March lows that we saw 2 weeks ago, or perhaps continue in a downtrend. I mean, look at what happened to pretty much every one of the EV stocks. They are just, they are failing to find bids where you would want them to. Instead, we're seeing, so BE is one, we're seeing steady selling, and we're trying to find support, but that's not a reason to be a buyer. Let the institutions find the support and wait for the trends to emerge before I put my money involved, is the way I want to look at it. So there's, I'm not sure if it's because of bonds or what the ultimate reason might be, but it seems that the appetite for risk isn't as high as it was. I mean, just 3-4 weeks ago, you could blindfold, throw a dart, and it was going to work pretty much. I mean, everything was working. It was scary easy. And, I think a lot of people are probably have developed some bad habits. Buy the dip, right? Well, the buy the dip isn't always going to work. It might not be a dip this time. It might continue lower. Why not stand on the sidelines and wait, or move into the things where money's flowing into? So to me, it's always about what's the best opportunity for my money right here, right now. And it's really difficult to find those. So that is the message, the message of the market to me is go slow, be a little bit more patient and defensive. Don't just rush into things the way you could 3 weeks ago. You can just buy it. Alert goes off, no problem, buy it. Alert goes off now. Okay, I have an alert. I want to investigate. I want to slow down and really see what are some of the other stocks in this group doing. What are, the weed stocks, Tilray, ACB, APHA, they're not rallying. They got hit hard. They've got to bounce, but maybe they're just undergoing accumulation. They don't have to just turn back higher. So wait for confirmation on multiple timeframes is what I'm all about here.
One thing I saw you mention last week, I think, or maybe it was the week before, whenever the market started to bottom, you mentioned, generally the first buyers to come in on a meaningful dip are the buyers that are covering their that are buying back their short positions to take profit. It's not always somebody like an institution coming in long, which marks a meaningful bottom. It's these large short positions that are actually going back to cash, and the way that you exit a short position is buying it back. So is that something you look for, kind of more that side of things, rather than assuming it's just going to be someone going long in a stock?
But it's always so supply and demand. You don't know who's on the other side of the trade and what their intent is. But when we see a large flush in the market, a lot of times the first buyers there at that volume weighted average price, for instance, on the SPY, are going to be the guys who've been, who are short, saying, listen, here's my opportunity to take some risk off. This is the right place to do it. So they'll put some bids in. Other people will start to notice, hey, it's not going any lower because someone's bidding for this. And they'll start to nibble. And then, other people start to say, hey, listen, it's down a bunch. It seems like it's finding a bid. I'm going to stop selling. So it's always about the transition of supply and demand. So first you get the shorts to cover. Then you get, the longs who've been selling, who are basically exhausted sellers saying, all right, I'm gonna hold off here for a little while. And then you have the other participants who are in cash. So you always want to consider, what would I be doing if I was short here? And it just pulls in 6% in 3 days to a key level that's been holding. I would start to bid. What if I was, a seller? Well, I'd look at it and say, where does it have the potential to go before it's likely to find buyers? We're there, so I'm going to stop selling. Then if I'm on the sidelines in cash, I might be saying, hey, it looks like it's starting to find some buyers in there. Now I'm going to switch down to a very short-term time frame and look for that evidence. And then at this key level on the bigger time frame, start to put some bids in and then protect those with a stop and see if the market allows for me to continue to hold. And that's, so on the day the NASDAQ made that low, it was about midday. I said, looks like the low is in for now. And that was it. I didn't post that at the low. I put it at, when it was at 300 or so on this day, right here. It was about 300. I said, looks like the low is in for the day. And it was, and that's the low of this swing so far. But it's all about those metrics and what happens at these bigger levels. What happens to all these people who are looking for this head and shoulders pattern to break higher? Well, now they're stuck and they're saying, okay, it failed. I got to get out of this thing because my thesis for being involved no longer exists. And I want to beat the next guy to the punch. And now the short sellers are saying, hey, we trapped those guys up there. Let's put some pressure on. Let's keep an offer on this market. And then people who had a stop underneath that prior higher low start to say, hey, I'm going to sell a little bit, raise some cash just in case it gets worse. So it's always about, the dynamics of supply and demand as you really know that supply and demand well, Jake.
I love it. I mean, that's the thing about supply and demand. There's certain rules that happen. The supply and demand curves can only go so many ways, and so it kind of keeps things to the point where you don't have to interpret too much past those curve shifts. So, as you mentioned, supply and demand is just so crucial, and understanding how that works. If somebody's watching and you're not familiar with supply and demand curves, it may be worth just watching a quick YouTube video. We have a couple that we've posted on TrendSpider of kind of how that works, because that's so important to understand that. A lot of people think prices only go up when buyers step in, when a lot of the time it can be maybe selling just dries up,
right?
Or prices drop because sellers came in, or maybe it's just that there's no buyers there. It doesn't mean that there's an increase in sellers. So, I think it's important that you really brought up the supply and demand side of things, and we'll see what happens into the next couple days. I mean, as you mentioned, you just got to take price for what it is. Only price pays. So, it's one of those things that we'll see what happens. And just last question, if risk is starting to come off, do you think that Bitcoin has proven itself a little bit as something that's kind of able to get through that sentiment of risk off? I mean, it seems like Bitcoin is holding relatively well, considering, the textbook says Bitcoin should be dropping if yields are going up, just based on, how things work on that side of things. Is this something that you think is so strong right now that it's kind of ignoring these types of macro things happening in the market?
Even with Bitcoin, I'm not, I actually have kind of gotten off of talking about Bitcoin and crypto so much because there's just so many lunatics. When you type something in on Twitter about crypto that's mildly negative, or say you're taking a profit, you just get attacked. It's crazy. It's the most insane thing I've seen. But even with Bitcoin, I look at it, it's supply and demand. Where do we measure that from? From significant peaks and lows. So, we have the year-to-date volume weighted average prices, that orange line. Here's a significant low. It was tested. Anchor won off of that. We didn't quite come down and test it, but when we put a volume weighted average price off the high just a couple of weeks ago, well, now that volume weighted average price is flattened out. We're back above it. And now this is the new key level for probably the next couple of days. If this fails, then we'll probably go down, maybe test 50,000. But I always take it bit by, bite-sized pieces. I probably would make more money if I bought it and held it, but it's not in my DNA to think that this thing's going to 1 million and I have to hold it. If it goes to 1 million and I only make 900,000 instead of 1 million, I'm okay with that by being out of it when it takes these big falls. To me, it just feels stupid. If I have it up here at 56, if I'm holding, even if my cost basis is 30, if it goes to 56 and it drops down to 44, I just feel stupid in there holding something that's down 20%. That's just my mentality. And I'm not trying to tell people what to do with their Bitcoin. I'm saying from a trading perspective, Oh, now the buyers are back in control. They've proven it after this pullback. So now again, we're innocent until proven guilty. We've got a beautiful pattern of higher highs and higher lows since we, broke this, 15,000 level. We anchor one from here and then off of there. And, it's just so logical the way money is flowing into this at the key inflection points. To me, it makes sense to trade it.
Makes sense to me. Well, it's always a pleasure to have you on talking about the markets. And in this case, it's going to be an interesting next couple weeks, and we'll see what happens. But I've learned so much from you about the anchored VWAP, about anchoring in general. I use the anchored volume by price a lot, and the only way I know where to even think about starting that anchor is because of what you've taught me, and you've taught a ton of people a lot of stuff about supply and demand, volume weighted average price. And we really appreciate you coming on and sharing your thoughts into the week ahead.
Thanks for having me again, Jake.
All right, let's look at some weekend chart requests. These are a few different ones than we've been looking at lately. Some of the reasons that we do post the same or look at the same charts over and over, because we want to see how the chart has kind of progressed from the last week. And so this time we're going to have some brand new charts to look at, starting with SOS. This is one that's been pretty popular across Twitter and came up a couple times on the requests in our Twitter post. So a couple things here. One, if we anchor the volume by price from the December lows, you'll see that we clearly have a volume shelf forming here. A lot of shares holding here, which is possibly going to create a base for the price. You can also see that we do have a pretty tight symmetrical triangle forming here. It's getting quite tight. It's not perfect, but you'll see here if I move these around a little bit, we are getting pretty close to the apex of the triangle here, and we're going to have to either move to the upside or the downside because the apex is within a few days at this point. So we'll see what happens there. You can also see, using the Alphatrends anchored VWAP from this swing high, you'll notice that this support line here and then the anchored VWAP actually creates almost this natural type of symmetrical triangle look here. So we're also getting pretty close here, either breaking down or breaking through this anchored VWAP. The one thing that I want to point out on seasonality, if we look since the IPO, or pretty much since this went public, you'll see that on the monthly side of things, and this is something to anticipate into April. Obviously, we still have a little time before we get to April, but it is interesting to see, since the IPO, April has not had a green month since this went public. So, 0% win rate means that this has not closed green versus the March close since this has been traded publicly. So something to consider on the seasonality side. Does not mean that it's definitely going down in April. It's just telling us, historically speaking, April has not been a very bullish month in the past. The past does not represent what's going to happen in the future, but it's worth noting from a seasonal trend side of things. So that's SOS. Three green weeks in a row. We're on the volume shelf. Possibly going to get a bounce into the next week, but we'll have to see how the market does going forward. BABA is the next one. This is one that if we anchor the volume by price from this most recent swing low here, you'll see that we do have quite a bit of volume and overhead supply we're trying to get through here. And you can see the last couple of days we've kind of gotten stuck within this area because there's just a lot of supply to get through. Now, notice here on the daily side of things on Friday, you'll see that we have this wick. And within the wick, if we go to the raindrop, notice what this candle looks like. If we go to the raindrop chart, you'll see that there's actually quite a bit of volume within that wick. And we do have a blue raindrop. I'm not too concerned about the color of the raindrop. I'm more concerned that a decent amount of that volume that took place on Friday was actually within this wick, showing that, possibly some aggressive buying, conviction by buyers for sure near the top of the range. And then on the weekly side of things, if we go back and look at this longer term trend, we're pretty much right where we've been in previous moves to the upside over the past 4 or 5 years. And then if let's say that we want to start the volume, not the volume by price, the seasonality, since we bottomed here, pretty much since this new trend emerged, let's start it from pretty much February of 2016. and we look at the seasonality, April and May do have a slight uptick, 60% win rate, and then May has an 80% win rate. So seasonally speaking, we are going into a little more of a seasonally bullish time of the year. Compare that with us nearing this longer term level of diagonal support. It's definitely worth keeping an eye on into the coming weeks and into April and May. And on top of that, it hasn't really done anything in the last like 4 months. So possible double W bottom here, double bottom. We'll just have to see what's going on into the coming months. But the seasonality does suggest at least that the trend is moving into more of a seasonally bullish time of year. RKT is the next one. Rocket. This one, this one's an interesting one. So if we anchor the volume by price from this this swing low here before the move up, we technically could anchor it from the swing high here, but notice how it's still a little clunky. I want to get a little more data here, so where the anchored volume by price isn't as clunky. You'll see if we anchor it down here, you'll see it gets a little less clunky, and you'll see there's quite a few shares holding right at this 23 area, and that's exactly where the price caught a little bit of a bid. Notice we do have this raindrop with a decent amount of volume near the top 50% of the range. And then on the weekly side, I wish I could do something with this. I mean, there's literally, I mean, maybe we could draw a rounded bottom here, a little bit of one. So just double click on it, smooth it out. And you can see we're kind of forming a rounded bottom. But other than that, there's really nothing to go off of. I mean, look at this previous week when we had this huge short squeeze. This just kind of throws everything off. And then if we look at the monthly chart, it's even crazier. I mean, look at this monthly candle. It's really interesting to see how this did not hold any of that move at all, which tells me that it was definitely just a really big liquidation on some short side of things. Maybe someone was really heavily short in RKT and they got, a margin call somewhere else and they had to start liquidating and starting, it just created this huge squeeze. So all in all, I mean, we would definitely need to break through, obviously, this 42 area to really get going again. But for now, we are hitting higher lows. You've got your low here in October. You've got your higher low in February. Technically, we're at a higher low for now, and we are at this volume shelf on the daily side of things. Now, if we look at let's look at 2021, looking at the day of the week. Going into next week, if we're looking back since the beginning of this year started, Monday has a 56% win rate. Better than 50%, but nothing crazy. Friday has a 64% win rate. Now Tuesday is has a very big discrepancy here. Only 18% of Tuesdays in 2021 have closed green. So definitely something to watch on Tuesdays if you are more of a scalper or a day trader. Possibly some seasonal trends hitting in on Tuesday, and 56%. It's not really a really extreme number, right? 56% is almost 50-50, right? But 18% is something that's worth noting. So just keep that in mind when this does start trading into a Tuesday. Roku is the next one. Roku has gotten absolutely destroyed over the last few weeks. But it's also gone up a lot. So when we say it's gotten destroyed, it's just gotten destroyed from where it was. I mean, it's still up a ton from where it was a year ago. I remember watching this in the 80s and the 90s when COVID was happening. So all in all, one thing I want to do is turn off the volume by price on the daily and actually turn it on the weekly side of things. And you'll see here, if we anchor the volume by price from the COVID lows, you'll see here that there's just not a ton of volume supporting price up here at all. If this was truly a pullback that had some volume supporting it, we'd want to see a volume shelf here around 350. Instead, we see a little bit of one, but a majority of these shares are still holding in the 120s and the 150s. So that tells me that there's still a lot of shares holding at a profit here. So if this did start possibly the next leg down, you do have a lot of people that have some profit to sell and would be fine probably selling. So just something to consider. What also could happen is you have a big sell-off here, but all of these shares take profit and somebody absorbs those shares way up here and this volume shelf grows. So that's something that can also happen. Obviously, we can't really predict what's going to happen here, but we can say, at least for now, there's not a lot of volume supporting price up here in the 340s, 350s. Now, if we look at 2021, Wednesday is definitely the worst performing day with only a 36% win rate. Tuesday is actually the best performing with a 64% win rate. Compare that to the 18% on RKT. This may be one you want to look at on a Tuesday rather than RKT if you're trying to go long on something. Moving on to Piton. This is one that's also really gotten just hit pretty hard over the last couple months. Any growth names have been have gotten hit hard with the 10-year yield moving up. So that's just kind of what happens. Money gets more expensive. It gets more expensive to borrow money, and growth names definitely need money to grow, and so that's why they get hit the hardest. Piton on the weekly side of things, this is what you want to see, right? We just saw on Roku something opposite of this, right? We're anchoring from the March lows. You can see how many shares are holding in this area versus Roku didn't have any shares really holding in this area on this pullback. So this is what I would call a lot stronger of a setup, because you do have a lot of people now back to break even. You have a base kind of creating a possible level for price to move up off of, whereas Roku just did not have this. Most of those shares were way down here. So that's kind of a good example of looking at the Roku versus this one and seeing this would be more of a textbook setup that you want to see versus the Roku one where there's just not that volume. Now, looking at 2021 day of the week, you'll see here that for Roku, Piton is only, Wednesday only has an 18% win rate. Friday has a 73% win rate. So Friday's action did run in line with the seasonality. So we did close green on Friday, and you can see that Friday is historically just a strong day in general. Now, if we go to the month of the year, let's look at Piton since September. You'll see here that we still don't have a lot of data to go off of. I mean, we've only really gone public. This only went public less than 2 years ago. So, you can't really look at the seasonal data on the monthly side. So that's why I'm really looking at it only on the day of the week. So if you are looking at something that's more recent, that just went public, the monthly seasonality is not going to work great. But I do like to use the day of the week, and I like to just look at, since the year to date, how has each day of the week performed? And in this case, you can see the numbers here with Wednesday having an 18% win rate, definitely the worst day of the week. Friday having a 73% win rate. So that is the chart request. Hopefully everybody enjoyed this, learning a few different features to go and use on TrendSpider. We have the raindrops, we have anchored volume by price, anchored VWAPs, seasonality. We have a ton of other things that we can also touch on as well, such as the auto trends, the pattern recognition, especially if you're somebody that is still learning about the charts. The pattern recognition is really nice. So all you have to do is click on patterns here. And let's say that we wanted to look for maybe engulfing candles. And you'll see here that technically we had a bearish engulfing candle on Piton this week. And that just means that the body of this candle is engulfing the previous candle. So this just says E for engulfing, but since it's a red candle here, we know it's a bearish engulfing candle. So make sure to use the pattern recognition. It's something that really helps, especially for those that are still trying to learn these patterns and what they look like. And all in all, we do have the 7-day free trial. So you can go in, try all these things out without having to buy anything. And if you do just want to check out our content and join every Sunday, make sure to like and subscribe so you're able to just get that notification when we're about to start the stream. And we really appreciate you checking out these Sunday shows. And we'll see you next Sunday for another show and another episode. Everybody have a great week, and thanks for watching.